Hello, everybody. Welcome back to another episode of Palantir Weekly. It is episode number 117. In 72 hours, we will be having Palantir's Q1 2024 earnings, and I am very excited. My European brothers are excited, but they don't share their excitement because it's early where they are right now. But you guys are excited, right?
I'm super excited. I'm $2,000 call option excited.
Yeah, that was a nice little YOLO bet. What was the strike on that? 25 or 30?
27.
Okay, let's see if we can get there. Amir, you haven't been on the channel for a very long time. You were supposed to make an appearance about 4 weeks ago, and you chose sleep over Palantir Weekly. So just tell the audience why that ended up happening.
Because I'm a father, hardworking guy, work 3 jobs, and sometimes it just doesn't work out, And actually, it's more than just that once. I think I've promised to be on 5 times since last time and never woke up.
Yeah, so you can't use that excuse for every time. Also, I don't even think your daughter was home that weekend. She was somewhere else.
Yeah, so. I think she was in Japan, but still, I was preparing mentally for it. So.
I mean, just to defend Amir here, that when your daughter is not home, that's the time for you to sleep as a parent.
That's true. That's true.
Thank you. Can always count on you. But I'm happy to be here. So let's talk some earnings, right?
Yeah, so we got a lot of stuff planned for tonight in terms of topics and discussions. Amir has a bunch of charts. So I think let's start the conversation here. Thank you, everybody, for being here today. Look, we've been covering this company, all of us, for almost 3 years now. I mean, 2021 to 2024. It's been an exciting journey. I'm literally going to meet Arnie, who's flying from Italy in a couple of days, right? So it's going to be really cool to actually meet someone in person, and I hope to meet you guys one day. Before we get started into the numbers, how do you guys feel about how the company has progressed from when we started covering it, when it was $6-7, and what are your emotions going into this earnings? Because it's a big deal for them to be in their probably 6th GAAP profitable quarter, and for Karp to take the stage again to tell the company that they probably did $615 million in revenue. So let's start with Vince. What are your raw emotions going into this? Then we'll go Amir, and then we'll get into the numbers.
I'm very, very excited. I mean, since we covered Palantir, there has been a lot of earnings calls, and on many earnings calls, I didn't have a feeling of where the company would go. It was like, yeah, we could go in and Karp can bang the table, and then it can be interpreted very bullish, very bearish. But the last few earnings calls, I feel that the company has been improving so much behind the scenes, and funny enough, on sales. They were a company that sucked on sales, and somehow they made a major innovation on sales that everybody is copying now. And I just feel that it goes underappreciated how well they are doing behind the scenes, and I do think that they're going to surprise on the upside very much this quarter. I mean, they're doing 5 boot camps per day. If that is not going to do something to their customer numbers and their revenue numbers, then what the heck are they doing with boot camps?
Yeah, I agree. It's going to be really exciting, especially because when we covered them 2 years ago, we were worried that this guy right here didn't know how to sell his software, and it seems like things have changed. Amir, what are your raw emotional thoughts going into this earnings?
Yeah, just adding on what you... sorry if I sound sick. It's pollen season here, so I'm a bit stuffed in my nose. But no, just as you mentioned, we've been covering this company for a long while now. And if you rewind time 2 years, feelings and emotions before an earnings, it's completely different compared to now, where we actually had several points that we could point out, like Palantir really needs to improve on this. This is not working, especially in regards to the sales. They had an inefficient sales cycle. They had to boost their revenue by purchasing SPACs, and there were a lot of concerns on multiple levels. And going into this earnings, I feel like there's not really much to worry about. I mean, the company is executing and has been. We can see a clear roadmap to scale. So emotionally, I'm not worried at all. I know that the financial performance will come. I mean, it's just a matter of time now. So this quarter doesn't really mean much in terms of that. And I think you can also tell by the way Carp speaks recently that they're in the same mindset of that. Like there's not really much to worry about. It's just execution now. So yeah.
Yeah, I agree. I'm super excited. I think that, you know, we've built a huge community, all of us on the internet, everyone that's here Friday night, you know, 11 p.m. You guys are here listening to us. And so, and it goes deeper than the investment. It goes down to like, this is a company we all think can be very special in the world for a variety of different reasons. And all of us have our own reasons. And obviously the money is a big part of it. Like we all want to make money here, but it's super cool just to follow their journey. I mean, it really does feel like a company you're covering in its infancy. And in the next 20 years, this company could be much bigger than it is today. Okay, so numbers. The charts you have, Amir, do you want to start off with those charts? Because I'm assuming those are specific metrics you have charts on, or are they like broad macro charts?
No, they are specific numbers, and yeah, we can look at the charts and talk around them.
Okay.
Everyone can weigh in, so it makes sense to have some visual representation.
Okay,
I think last time we did this, I just spoke numbers out into the air, and it was kind of hard to visualize, I guess.
So let's start with customer count. I want to start the conversation there, and then if you have a chart for that, you can pull it up. If you don't, no worries.
Wait. We can just go line item by line item, I guess.
Okay, let's do that. Yeah.
Let me share screen. Oh my God, my camera is in the... it's going to be awkward for a while.
You're like looking that way.
Let me see if you can see this. Does it make sense?
Oh my. All right, so we need to...
but no, we're not going to look at that. I prepared some charts.
Oh, perfect.
Okay, is this good? I think I can make it smaller.
This is perfect. This is great. Yep.
Okay, so...
so you want to start off with stock-based comp? Let's start off with that.
No, I just put them in random order. But stock-based comp, I think we're bottoming out around 20%, which is roughly in line with the industry standard here. I think the only better performer is ServiceNow at around 18%. So I don't think we're going to see a much more change here. I mean, we saw a sharp decline several quarters ago, and now it's plateauing. So I don't expect to see any real movement in SBC if we compare it to revenue. I think it's going to stay around 20%. A couple of quarters ago, I had a hope that we would go below 20%, but seeing how much they're actually putting into growth now, I don't expect that to be the case anymore. So around 20, 21. Just short and simple. I don't know if you guys have anything to add there.
Vince,
any thoughts on stock-based comp?
Not so much. I mean, I feel that this was an issue at one time, but now it has normalized, and yeah, not much to add here.
Yeah.
I do think it'll be a little higher because they've been hiring aggressively and the boot camps have been scaling. So if it goes higher as a percentage of revenue, I don't think people should be that worried. I think last quarter they spent 140 million, right, on SBC, something like that. So if it's like 150, I don't think it's going to be a big deal.
I could look it up, but the absolute number isn't really too important. I mean, I have all the data. We could find it.
But, okay, let's move on.
Yeah.
You should have that memorized, dude. You should have that in the back.
No, my memory is actually really, really poor. So here's a more interesting chart. And everything really hinges on this. And it's the US commercial customer count growth. So we have the full line just showing absolute numbers of customers. So this one, we recorded 221 US commercial customers, and that's a quarter growth of 22%. And as we can see, since the launch of AIP in Q2 23, it's really started to accelerate, and
yes.
I expect that to continue. So above 20%, I would be satisfied. I don't want it to top off at 22 because we know that they've actually been increasing the rate of boot camps as well. So there's no reason this shouldn't be above 20% quarter over quarter.
Vince, any thoughts on this one?
I mean, I might be wrong, but I keep thinking that they're going to do a huge surprise on the customer account. Like, I wouldn't be surprised if they would have 300 or 350 customers on this quarter. And it might sound insane, but if they're doing 5 boot camps a day and they just have one new customer from every bootcamp. Because what I don't know is like, are customers repeating bootcamps? So is it like the same customers on like 10 different bootcamps, or is it like new customers every time? Because I think that if it is new customers every time, it's not unreasonable to think that they can close one from every bootcamp. And how many bootcamps did they have this quarter? 500, 600? Even if they close one, I don't know, every 5 bootcamps, then it should be 100 new customers.
That is true, but not in such absolute terms, because they have to record revenue in the trailing 12 months to be counted as a customer. And even though you're onboarded, I don't know how their like payment cycle looks like. We know that most customers pay Palantir yearly around Q4. That's why we always see such boosts in free cash flow in Q4. So I'm not really sure that it shows up like, well, we had a bootcamp yesterday and today we're using Foundry, so we're going to get billed today. So I don't think it translates that way. But I believe that you're right, that over time we're going to see like a massive jump in the customer count, and it's just going to compound from there. But I'm not really sure it translates like as of this quarter that way that you put it.
Yeah, I guess that we should see, because my point is that the bootcamps have been like S curving, and like we should see, because like they started AIP in Q2, so then we see in Q3, Q4 we start to see the increase, and then this Q1 we should see the increase from Q4, and already then it was like a very big number of bootcamps. So like you can see that the curve on the last 3 like is getting like quite sharp, and like I am sort of expecting like either that it's going to increase very sharply, or that they as you said, like if there's a huge delay on this, that they do explain or mention what they expect the delay is, and I'm expecting that we should get numbers from the bootcamps, because I don't understand if you have done 600 boot camps and we don't hear from the new customers and we don't see what's happening, then why are they doing them, you know?
Yeah.
So I agree with Amir. I'll bring the thing back up in a second. I agree with you, Amir. I think that I want to believe the customer count's going to explode, but you're right that unless they pay you in the trailing 12 months, they're not going to be a customer. So even if Palantir converted, let's say 100 out of the 500, right? Really good conversion. If they didn't pay within these 90 days of Q1, which most of them are probably on a pilot, right? Like they're still trying to figure out if they're going to pay, then they're not going to be counted as a customer. So I think that NVIDIA type of huge customer count quarter will come. Maybe it's a few quarters from now, if not early next year. But we're going to see momentum in customer count. And if we see momentum in customer count, top line revenue growth is, well, we'll talk about that. That is going to have to be guided higher. And if that's the case, I think that's what the street's really going to like.
Yeah, so that moves well into the... No?
Yeah, let's get to this one. So this is... Okay.
No, wait. I was going to put here. I just jumped. We can go back to the customer acquisition cost. So this ties into that. Actually, looking at US commercial customer revenue, we know that they boasted last quarter that they grew year over year by 70%, which is kind of misleading, because if you look at Q4 of 22, they actually lost 12.5% year over year.
Wait.
Quarter over quarter.
What do you mean 12.5%? They lost.
So if you recall the last earnings call, it was a really huge thing that Palantir grew US sales, commercial sales by 70%, which they did in absolute terms. But if you look at the comparison, Q4 2022, they actually lost revenue quarter over quarter. So it's a really bad comp year. So in real terms, they grew more like 40% and not 70%. If you would like average the Q4 of 22 out. Do you understand what I mean?
Yes.
So the 70% was a bit misleading in that way, even though it's technically true. It's just that the comp was very weak. because even though we see, if we go back to the growth of the absolute customers, we can see that this is increasing sharply. It went from 4 to 12 to 22. But if you look at the revenues, it's still flat quarter over quarter. Like, we're not seeing the AIP effect, which means, as Carp has been saying, like, they're not really worried about charging the customers. They're just interested in acquiring customers. I
Right.
think that this quarter we're gonna start to see a difference here. I think we're move probably upwards of 15% here. Like, we're gonna see an acceleration, is what I'm expecting here. We're finally gonna charge people for AIP. I think the product is proven enough. There are more than enough use cases. It's been almost a year, so I think it's time for Carp and the team to actually start charging for AIP, because we're not really seeing the revenues start to come in from AIP yet. There's some quick thoughts on that. What do you guys think?
Real quick, before we give our thoughts, I want to play this because you're talking about commercial growth and you have that 70% number. We had Carp say something. I just want to get everyone's raw reaction to what he said over the past couple of days.
We do see a difference in commercial. We didn't give last quarter's results, obviously, but the quarter before we grew 70%, and we have a nascent and terrible sales force. We still grow at 70%. You know, imagine what a real sales force could do with those results. We do see a difference.
So
That's what we just looked at. Like, it's not really 70%, but yeah.
Right, because you're talking about the actual revenue, not just the growth percent or the quarter.
No, it is 70%,
like the comp.
But the comp, if you look at Q4 22 here, where my mouse is, they actually lost revenue.
Right.
So the comparison is really, really weak.
I get what you're saying. Yeah.
So Q4 2022, if you look year over year, like, it's not hard to grow 70% if the comparison is like you lost revenue. So
Okay, well, they guided 40% on US commercial. So
yeah.
we know that's going to come in at 40%. That would be compounding from Q1, which was 2023, right? I'm looking at your chart. That was...
Yeah, this is just the percentages. I don't have the absolute
You don't have the actual number. Okay, gotcha.
Yeah, so I have the number. I have a chart here from Arnie. I don't know if maybe
share screen. I can show.
You see, Arnie is not here, but he's still here somehow.
He's here in person. Yes.
Yeah, like this is. Do you see the?
Yes, everyone can see our DMs of us talking about selling options. Vince is like, I'm making so much money selling options. I'm like, yeah, no, that's awesome. Right, go ahead.
So you see, this is what Emir is speaking about, that they went from 85, 86, 88 down to 77. And this is the comp, this is the comp that they compared this growth to. And even if they, let's say, because Emir is expecting a 15% quarter over quarter growth. So that's 131
15?
times.
Did I say that?
I think so. You said it. Because on your chart, it says 12 and...
Oh, yeah. Quarter over quarter. Yeah.
Yeah. So that would be times 1.15, 150. So it would be like 150 million compared with 107. So what is that? That's a 40.7% increase. So it's funny because it's like on quarter over quarter, it will look really amazing, but maybe on the algorithms, like the growth goes from 70% to 40%, which is maybe not, yeah.
Which is actually equally impressive as Q4, just against a stronger comp, so.
Yeah, I mean, 40% growth is still 40% growth, dude. That's still incredible, right? Even if it's off of a little bit of a smaller base. So I think that revenue will do well. Is there any concern that they don't do well on US commercial revenue growth, or are we pretty sure they get to that 40% number?
I'm not concerned.
Yeah,
I'm also not concerned.
Yeah, I mean, most of their boot camps were in the United States. So,
I mean, we have some hardcore Palantir fans that frequently post LinkedIn posts from different companies after like attending a boot camp and their feedback from attending, and I think it's been so overwhelmingly positive. Like people are like, oh my god, this is groundbreaking, and that's been like a trend. Like everyone is super impressed, and you know that people talk to people, especially at those C-suite levels. So I don't know, I think word is spreading, and I think this is just the beginning of the S-curve, as Vince said, and we're going to start to see some impressive stuff.
Okay, next chart. Yes, we know Drake dropped in the chat, guys. I can't listen to it because I'm talking about my true love Palantir, but Drake did drop his diss, and after this podcast is over, that'll be the first thing I listen to. Go ahead, Amir. What else we got to talk about?
Who is it dissing?
Teenagers who, it's like watching my kids fight. Who cares?
He's dissing Kendrick Lamar. You guys aren't from America. You don't get it, dude. Like
America.
Well, even if you,
Amit, no. We're over 30. Okay, it's not that we're from the US or not from the US.
Dude, it's not about age. This is a hip hop, bro. This is beef, dude. This is like if I beefed with Amir or something. This is more serious, but okay. Anyway, Amir, go on.
Yeah. Okay. So it ties into well. I want everyone to just try to understand what this chart shows. In short, it shows customer acquisition cost, which is really important to track. Palantir does not present this. I had to calculate it myself. And what we're seeing from Q2 and onwards is a sharp drop in customer acquisition cost, which proves to us that AIP is working. The boot camps are working. It's much cheaper for Palantir to acquire customers. And if you look like across the whole period here, you can see that this area of Q1 21 up to Q2 22, you can be like, well, it's not that impressive now because look back 2 years ago, it was so cheap. Then you're forgetting that this whole period was with the SPACs. So they actually bought this revenue. So they grew a lot in customers and revenue, but artificially. So this is not organic. So this shouldn't really count. So if we only look at absolutes, we can see that, yes, they're actually for real now growing under 10 million per customer acquisition. And I'm expecting this to keep dropping as bootcamps scale. So it might look a bit confusing, but basically the...
Let me see if I can break it down. So in Q4 2023, it cost us basically $3 million to get one customer, and they paid back $9.4 million. Correct?
Yeah, almost. It's expected that the customer will pay for itself after 9.4 months.
Oh, okay.
So after you spend money to acquire a customer, it takes some time for that customer to like pay that spend back. Like how much are you earning on the customer? So let's say that you invest $10 upfront. How long does it take to get that $10 back?
Right.
Is what this chart is showing.
Right.
Can I ask, because Palantir doesn't do traditional marketing, and like, how do you get this cost of $3 million per customer? Is it the forward deploy engineers that they like have to work on the customer on the pilot programs? Is it how?
No, yeah, almost. It's a bit of a complex formula. I have it in my. I don't know if you guys have read my.
Is it just sales and marketing divided by the number of customers, or it's more?
No, it's more complex. Let me get the formula. I have it in my Seeking Alpha article. But yes, they do have marketing costs. So basically, to get the customer acquisition cost, it's just the previous period. So when we say period, we mean quarter. So you take the previous quarter's sales and marketing divided by the current period's addition of customers. So let's say they increased 15 customers and they spent 50 million on sales and marketing. You just divide that. So that part is simple. The payback in months is way more complex. I don't know if it makes sense to try to read it out. You can read my Seeking Alpha article, but yeah, basically how much customers are you getting for how much you're spending on sales and marketing is how you get this cost.
Okay, so what do you expect going into Q1? How this?
Yeah, I'm to simplify, I'm expecting the trend to continue lower. If we can make it cheaper than 2 million per customer acquisition cost over time, that would be really ideal. And the payback months is really dependent on how much are customers paying Palantir on average. That's what dictates like how long it takes them to pay back on average. So
Right.
if we can make start to scale up how much we're charging customers, I think we're gonna have almost a one-to-one relation where like it takes like a quarter for a customer to pay for itself, you know. So that would be really ideal. But what I'm paying attention to is this moving lower? Are boot camps working? That's what I'm looking for here.
Yeah, and fundamentally, if boot camps are working, then the amount it takes to get a customer should be coming down, just like almost through economies of scale to an extent. And then if the pilots are more effective and they're streamlined, the time it takes for them to officially say, yes, we're ready to pay you, should also come down. Which makes sense, because if they're targeting SMBs as well, more downstream, those companies should pay automatically because they're not like BP or Airbus that has to get a huge contract. Okay, cool.
We can move on from this unless Vince had something to add.
No, you can go on.
Like it might look complex, but it's not. But it's really important to track this. So okay, moving on. What do we have? Here's an interesting one. What I call the safety net. I really love this chart because it shows something we frequently discuss on Twitter. And some people are really upset that the government is more than 50% of Palantir's revenue.
Mm-hmm.
And another part of the community is upset that the top 20 customers make up more than half of the revenues. They say like it's a concentration risk. If one of the top 20 customers leaves, then it's going to hurt Palantir a lot. I look at it the other way, like the top 20 customers are the ones that are scaling out the fastest. They are the most satisfied with Palantir. Like, I'm not really worried about losing a top 20 customer because they're so entrenched with the software that it's really, really unlikely that they're going to leave. So I think that this is more like a safety net. Like we can always count on the top 20 customers rather than seeing them being a risk, is how I look at it. And I look at government revenue the same. Like I'm really happy to see government be more than 50% because you know that government revenue is going to be there. Like they're not whimsical, like where something may sway their opinion by tomorrow, which like a normal customer might be. So I think these two metrics, I would like to see both still above 50%. It's going to be hard when the commercial customers are scaling so fast. It's going to be hard for government to stay more than 50%. But I also think that AI spend within the government will increase. So I'm expecting both of these to be more than 50% moving into whole of 24, actually, but Q1 especially. What do you guys think about this? Is it a risk that they're concentrating into top 20 customers, or is it more of a safety net the way I see it?
I mean, I don't think it's a risk, but I think that we all invested into Palantir because, you know, they can scale and grow into something really, really big, and they cannot scale. Like scaling in the government will not be very fast. And if they're not getting new customers, then the future scaling is going to stop. So I would like to see, like, how do you say it? Like, I'm happy with the situation, but I would like to see this chart continue to go down more, because that would mean that they have a lot more new customers and they're scaling with new customers, which just shows that it's going according to thesis.
Here's where me and Carp disagree with you. We know that Carp has been saying for a long while now, I mean, we're talking 2+ years that I can recall, that he wants at least 5% of government spend within the defense space to go towards AI solutions. So if Palantir just keeps their current market share of the AI spend, like they don't need to grow, just keep their current spend. If we move to being like 5% in 10 years, government is gonna like still dwarf commercial. So I think government is gonna grow faster than not grow faster. It's gonna retain more than half of the revenues for 10 years to come. And I don't think that's bearish. I think government is really, really strong. I don't know if you remember my valuation model, where I show like how I'm thinking about that. Actually,
I remember.
yeah, okay.
Yeah,
So for people curious about a valuation model, I have a secret article out.
This whole podcast is Amir pumping his thing up.
No. But for real, I'm expecting government to be really, really strong. Like currently, we hear figures that around 0.1% is going towards AI within defense.
Yeah.
Corp said 0.5, Sham said 0.1. If that moves towards 5%, like slowly scales up to 5% over a 10-year period, I mean, government is going to be super, super strong. So no, I don't think it's bearish that it stays ahead of commercial for 10 years to come. I think it's really bullish that both are going to be super strong.
I mean, as long as the commercial is also growing really fast, I can buy this. And I think for me, it's more like the top 20 customers. I would like them to go down, because that means that they're getting, like we need them to get thousands and thousands and maybe tens of thousands of customers and scale with those customers. And yeah.
I can buy that one. I can buy top 20 being slowly phased out of the majority. I can buy that one, yeah.
I will say, I think that if you're investing in Palantir, you're investing in a defense contractor with commercial as a cherry on top, right? Like, and all of us knew this a couple years ago when really defense was the core business, and it's only becoming more important every single day. So, Amir, I agree 100,000% when you said AI is barely being spent in the government. And we know JATC2, the Titan contract. I mean, there's such a big rabbit hole we can go down, but the United States government is going to be spending tens of billions of dollars over the next decade in AI, machine learning, and trying to become the modern, essentially. Go ahead.
Now, hold on. I was going to say you invested into Palantir because they're a defense contractor. Like that was...
No, like, but
for me, they were an AI company that was going to be the future operating system of...
Yes, I agree. That was also why I invested. But regardless of whatever you thought you invested in a defense contractor.
Yeah.
Right? That's what I mean. So if the U.S. is going to be the modern pinnacle of forward defense and defense technology in the next decade, Palantir, like, who else is going to get that money? Lockheed, Raytheon. Raytheon already lost the prime contract to Palantir with Titan. Anduril just beat Lockheed, Boeing, and Northrop Grumman in another contract. And then if the U.S. ends up spending 10 or 20 billion, Germany's going to spend money, France is going to spend money, Sweden's going to spend, all these guys all the NATO countries are going to spend money, even if it's not as much as the U.S. And if all that money is going to Palantir, I find no problem with a lot of, of the revenue still being government. So I think it makes sense. And I think hopefully that continues to grow.
Here's an interesting one. I don't think a lot of people track this, but it's a metric used to check how efficient SaaS companies are in regards to sales. So basically, how much revenue is Palantir making compared to money spent on acquiring new customers? So this ties into the customer acquisition cost. And there are really 3 targets here. I've laid it out. So if you're below 0.5, like your company has an issue with the business model, the go-to-market strategy, or its pricing. So you don't want to be below 0.5. That shows like your company has some issue. If you're below 0.75, it indicates that, well, it's acceptable, but you really need to do more if you want to grow. If you're above 0.75, which is the dotted line here, dashed line, sorry, that shows that you have a healthy business model, like you have efficient sales. And as we can see, Palantir recorded a 1.5 last quarter. So if we look at the guy that popularized this metric, his name is Lars Lecky, he says the following: fundamentally, the key insight is that if you're below 0.75, step back and look at your business. If you're above 0.75, start pouring on the gas for growth because your business is primed to leverage spend into growth. If you're anywhere above 1.5, call me immediately. So the guy who made this metric said, if you're above 1.5, call me immediately. Like, he wants to invest in this company. So again, here, if we look at the previous periods, like this is like the SPAC period, right? So we can't really count that. And then we had the early, like 2019, 2020. It was immaterial, so we can't really compare.
Right.
If we just look like a year or so, a year and a half back, we can see that bootcamp is really working. Like, Palantir is getting really efficient with their sales. So someone should call Lars Lecky here. I think we have a company for him.
Can you real quick again just summarize the formula for the implied magic number?
Summarize. You take the current period annual recurring revenue, and then you net out how much you spent last period. How much the annual recurring revenue was last period. Then you divide that. I mean, it's a long formula. Wait, can you share my other screen? Maybe I can.
Yeah, or you don't have to share, but like I just want you to explain that implied magic number again. I mean, you don't have to explain the formula, but just conceptually.
So basically, you're okay. Conceptually, you are looking at how much revenue are you getting versus how much you're spending on sales and marketing. And the thing is that you have to look period over period. So you have to first annualize. Like, let's just say that Palantir makes 500 million this quarter. You have to annualize that, so times 4, and then you just remove, like, what's the increase from the previous period. So let's say you did 400 the previous period. That's a difference of 100 million, and then you just divide that by the sales and marketing spend, and then you get this ratio. So go check the Seeking Alpha. Just kidding. But yeah, I think there are some popular metrics that you can look at. We don't have to stay on this one for long. Sorry, I'm just trying to find my.
Dude, that makes a lot of sense. I've never heard of that number. Vince, any thoughts on that number? I've never heard of that one.
I've never heard of it either.
You've probably heard of this one, the rule of 40. Have you heard about that one?
Yeah, definitely.
Yes.
I'm just wondering on because, you know, like on SaaS companies, I was involved in a SaaS business once upon a time, and it's like, because my understanding of Palantir is that it's not like you have a contract and you say, okay, we're paying 10,000 a month. So I'm not sure. You know what I mean? Like, it's not crystal clear to me that Palantir is in this category. Because, for example, if you go to hobbit.ai, or if you go to, you know, Zoom or something, it's like you pay $10 a month and you get this service. But as far as I understand, like, Palantir is, you're paying for the users, and there's an element that you're paying for, like the usage of the product also.
So just a quick one, how you calculate it. First, you get the annual recurring revenue. So you take the revenue for this period times 4, and then you get the implied net new annual recurring revenue by just removing that. And then you look at the sales and marketing, and then SPC related to sales and marketing, and any other adjustment like payroll taxes. So you get the Palantir reported non-GAAP sales and marketing, and then you just look at the sales and marketing versus from the previous period compared to the net new annual recurring revenue, and that's how you get the ratio. So it's a bit of a complex formula. It's hard to just talk about it, but when you like look at it in Excel, it makes perfect sense. Anyway, looking at the more common one, the rule of 40, where you look at let's see, I'm just trying to find it. Wait 1 sec. I have a different part of my screen here. So yeah, the rule of 40. This is basically used to check how healthy your SaaS company is, with the famous 40% line. That's where you check like the growth rate of the company and its profit margin. So a lot of companies might grow their revenues a lot, but be really unprofitable.
Right.
And that's not really healthy over the long term. So you want to have
Cloudflare got punished, by the way, on earnings. They're growing 30%, but it's been a year. They're still not profitable, right? So they got hit.
Yeah, and you can use different metrics for the rule of 40. There's not really any industry standard. Some people use just the revenue growth rate. Some look at the monthly recurring revenue. Some look at free cash flow growth or EBIT or EBITDA, whatever. So you can like substitute it for what makes sense for your business. I use the cash flow margins for the profitability, just so we can get a sense, because we know that Palantir has been cash flow positive for a long time now, even though they've not been net profitable. But they're actually adding cash to the business. So I've used the cash flow margins and then the last 12-month revenue growth rate. So if we combine these, we get a ratio, and we're starting to see Palantir be above the 40 line again, because if you look here again, this is the SPAC period. This doesn't really count. It's just now that Palantir is getting to the like healthy state of business where they're staying above the 40% line here. So I expect them to keep being above 40. It's really good to see. Not much else to say here.
So they weren't
They
weren't above 40 for all of 2023, basically.
No, well, it depends how you look at it. I know that Arnie, who's not here today, unfortunately, he doesn't like using. He likes to use EBIT margin instead of cash flow margin, but I like cash flow margin. So his chart might look a bit different. As I said, you can substitute it with what makes sense for the business. Not all companies that are profitable, like by a lot, have really good cash flow margins, so you might use a different metric. But I used cash flow margins and annual recurring revenue growth, and that's the way I see it makes more sense. So you look at the previous quarter, you times that by 4, and then you just compare it to the cash flow margins, and which we know that the cash flow margins were really, really strong for the past quarter. So either they have to grow a lot more in revenue, or they have to get a lot more cash flow margin, which they won't get. I'm just going to jump a bit. If we look at their free cash flow margins, it was about like 50%, and we know that they grew like 20% revenues somewhere around there. I don't know the exact number, but they're not going to match this. We know that Q4s are like busted because in this billing cycle, most customers are probably billed and paid during Q4. So this won't be replicated, probably. But I'm still expecting, like, if we can be around 30% cash flow margins, that's where I have them, like, over the long term as the business matures. I'm going to be really happy with 30% cash flow margins. But this was the first quarter that they stay above 40%, because they've really not been growing revenues a lot. So it's been hard to stay above 40% because revenue just hasn't been there. But yeah, I hope that they can stay above 40 this quarter as well. It's a big if, but if I had to guess, I would say yes. What about you, Vince?
Yeah, I mean, I'm pretty sure that they're going to do really well on revenue, on customer acquisition. So yeah, they should easily be also the margins. So they should easily be over 40.
Do you want to just talk quickly about the revenue distribution? So basically, the darkest one is the US, rest of world, and then UK. France is not relevant anymore as of 2022. So if we just look at these three, UK, rest of world, and then US, we've been hearing Carp talk a lot about how weak Europe in particular is. And that US is super, super strong. But if you look over a year, like, US is not growing. It's still at 60%, like, even after a year. Q4 of 22 was 59%, and Q4 22 was 60. So they're not actually expanding US revenues a lot, even though Carp says that the rest of the world is really weak, which we can see that the rest of the world is actually growing for 4 quarters from 26 to 30%. So it doesn't really match what he's saying during the earnings calls.
I think he means the commercial.
Yeah, it could be, but he also says that the governments in Europe aren't willing to spend as well. So I don't know.
Yeah, but
It's a bit confusing overall.
What I mean is that if the U.S. government is spending a little bit less, and then you're getting an increase in U.S. commercial, then that percentage can stay the same, and it's still.
You just mean the trends he's seeing rather than the absolute numbers in revenues.
Yeah.
I want to bring this up as conversation. So Karp in the last call said Germany and France, you got to get your shit together and buy our software. And then over the past couple of weeks, we've seen some German media publications. Some people from Germany have reached out to me saying that these are the biggest media publications in the country and that they are positively advocating for the country to procure Palantir. Do you guys think Karp once again calls them out in this quarter?
I'm actually really curious to see, because they have had a few boot camps outside of the US now, and we have gotten some new Italian contracts. There was a boot camp in Italy. So I'm totally open to that. Anything can happen. Like maybe we start seeing a re-acceleration in EU.
I just think it's so funny that the sun above your head, and then you can finally start see the sun coming up now, like in the.
Yes, I would want to stand up and pull down the blinds, but I might or might not be in underwear, so I cannot confirm or deny.
Everyone thinks I do my market open in my underwear, and it's like I don't. Like I'm always like, but you guys are doing the fucking Palantir Weekly, and this is why I love to do it. We're all just guys talking at the end of the day. That's it.
Exactly.
To your guys' point. I don't know if he's gonna mention it. I think didn't he do a conference just a few days ago where he once again spoke that Europe is lagging behind? Like,
dude,
did he reiterate that just a few days ago?
I think Karp's gonna call them out, and I think Karp's gonna have a rigorous tone, and I think he's gonna try to not say "I told you so," but basically imply "I told you so," because he sees the same articles we see, and he's probably getting way better intel than we are about the potential terrorist attacks going on in Germany and how the German officials want Palantir back, blah, blah. So I think he's going to I think the thing that was so unique in the Q4 call is he said they're getting more talent than ever applying to the company. He said countries need Palantir more than they've ever needed before. And he said AIP is exploding. I think those same three themes are going to be hyper capitalized on again with more numbers to back them up. And I think it's going to be a rock star call from that perspective. And then the question becomes, if Germany actually does procure them again, it's going to be amazing because it's like he basically sold them on the earnings call, right?
Yeah, and we've seen that in the past as well, like companies leaving Palantir ideologically, but having to move back because they're like, well, kind of need this product, And wasn't there like terrorist attacks thwarted just last week in Germany, for example? And we know that that's specifically what they used to use Palantir for. So it could be implied that, well, they're actually back to using Palantir, and here are some results to ease like the info becoming public. But yeah, I'm not too convinced that Europe is as slow as implied, especially because you have to consider like Karp is present on the world stage. Like he travels to all these conferences in Switzerland, in Germany, in France. Like he's on each and every one of these and advocating for his product. So I don't know. He will probably mention it again. It might be the right thing to do, to like put pressure on them. Like, well, you kind of need.
You have nothing to lose. I mean, what do you have to lose?
Yeah. Right? So yeah, he probably will mention that again, but I'm not just seeing it in the numbers. I'm not seeing US being super more fast growing than the rest of the world. Like it's the opposite actually. Like,
well, Asia is for the rest of the world, right? And I think
and we have Japan, Korea is strong. Sure. So if we had like a better breakdown, we could probably see that, well, maybe Europe is relatively slow, and it's like slack is being picked up by Asian countries. That could be the case, but this is the numbers we have to go off of. So yeah,
right.
And I'm curious that UK isn't really increasing that much, even though we get the NHS deal.
Well, that's another thing about NHS. Do you think we still don't know the exact numbers on it because some of it's split with Accenture and stuff like that. But it's gonna have to start to
trickle into the.
Yeah, it's gonna have to frequent into the numbers, right? They're gonna have to start annualizing what it looks like. Maybe that's a boost that we're not thinking about, or maybe that's factored in. You know?
Well, yeah, we will see. That's an interesting one. Do you guys have anything more to add? I just thought it's going to be a quick one.
No, let's move on.
Yes, and I want to talk about buybacks because this has been a frequent topic. I don't think that Palantir should do any buybacks while they're getting this interest rate on their cash.
I agree with you.
I
agree
don't
with you.
think
Oh, you
there's any
give me your bull case for no buybacks, and then I'll give you mine. Go ahead.
Even though I believe that Palantir has been teetering on being undervalued some trading days recently, but it's mainly trading around the fair value range. I don't think it's super expensive anymore. But I still think that like they shouldn't really buy back. I don't see a reason to buy back like 2% of their shares, like, and waste their capital when they could get 5+% on their cash. It makes no sense. If they would say that like we can get a better return on our cash by doing this, like for example, if they would invest in Anduril, I don't know why they don't have an active stake in Anduril. They should. Like they have close ties, the same ideologies. I think they have an interest in Anduril doing well for their own sake as well. So I would like to see them take a stake. But aside from that, there's no reason to not keep growing their cash pile or their war chest, as they like to say themselves. Just while interest rates are this way, just keep abusing it. Like keep growing your cash. Like we've seen it grow from like 1 billion to 2 billion to 3 billion to soon 4 billion by next quarter. Like, so I don't see a reason to buy back shares here. Like the stock is not cheap enough. It's around fair value range. It makes no sense to just dump your accumulated cash onto buying back 2% of the shares that you're going to issue in 2 quarters anyway. So yeah, it makes no sense to me to buy back while interest rate on their cash is above 5%.
Just 2 thoughts regarding this. And one of them is that if they're going to do buybacks at one point, once the interest rates go down, their stock price should go a lot higher. So then they kind of miss an opportunity to enjoy the lower prices. This is just food for thought. And point number 2 is if the stock is going to go to $50, $60, $100 in 10, 15 years from now, or maybe in 20 years from now, would you rather that they bought back the stock while it was still $20, or is it better to then buy it when it's $50 or $100? Because I saw Jeremy, Financial Education, make a very good point about that. Apple was waiting a very long time with when they started buying back the stock, and it would have been much more beneficial in hindsight for shareholders that they started much earlier when the stock was a lot cheaper.
No,
Yeah. So I have something to say. Go ahead. You got it. I have something.
No, I really don't like this way of thinking because it's way too simplistic. If this was the logic, every company should just own all of their shares because they would expect it to grow more than 5% or whatever the risk-free rate is. Like it makes no sense because one, you occupied this cash. You can't leverage the cash. Because if you buy back shares, it's spent. While you have it on the balance sheet, it's open to be leveraged. Let's say that they have a sudden growth incentive that's capital intensive. Like if you bought back shares, like you can't do that. Like you have no cash to leverage. So that's why it makes more sense to collect interest on it rather than just buy back. And it's not about buying back shares. Like, well, it was $5 last year and it's 20 now, so they would have made like 400% return. Like, no, you buy back stock when the stock is significantly undervalued, not in absolute terms of stock price. It makes no sense because you could just go public and be like, well, the stock's going to be higher in 10 years, we think, so we're just going to buy back all the stock we went public with. Like, it's nonsensical. So yeah, no, I don't agree with either Jeremy or your take. I think it's way too simplistic to look at it that way. And yeah, sure, if you go back a year and a half in Palantir, you can be like, well, they should have just spent all their cash on buying back stock in $6 range. Yeah, but then it would have been good today, but they wouldn't have any cash to grow it to grow to where they are today, because they wouldn't have any cash to leverage. So you need to think a bit broader, and then not just like, well, I think the stock's going to be higher, so we should buy back stock. Like it will all most certainly grow higher if the business is developing, but the criteria to buy back stock, in my opinion, should be when the stock is significantly undervalued, and I don't think that's the case for Palantir here, even though I do believe that the stock's going to appreciate the coming quarter, the coming year, the coming 5 years, the coming 10 years. I still think that you need cash to leverage. They're still an early business, like they're still young. I mean, they're barely like low single digits revenues. I mean, there's a long way ahead for Palantir. They're going to need cash sooner or later, even though Karp said that currently they're not cash constrained. Like, they can't pour more gas on the fire just to make the fire bigger today, but that might not be the case in one quarter. I mean, we're already seeing how much happened with the business over 1 year. Suddenly there's AIP, suddenly there are boot camps, and a lot has happened to the business, and a lot might happen a year from now as well. So you need this war chest. It's
let me get in here as well. I think there's a couple things. I think number one, the first argument you make, Vince, is that if interest rates go down,
I just want to say, I said food for thought. I didn't say
no, it's not your argument.
Yeah,
it's a good conversation. So it's not your point. The conventional talking point is, if rates come down, stocks go up. That doesn't have to be the case, right? Like, that could be the case for maybe 5 months. Rates come down, Palantir goes up like 30%. But then if rates come down, it's likely because something's breaking in the economy. And if we have a full-on recession within 18 months after that, the stock could come crashing 40%, 50%, right? Depending on how bad it gets. So I don't think that's the best argument for buying it back now. Number two, I agree with Amir. So Coach Rep here just put in the chat, there's 2.18 billion shares outstanding. Let's say we spent all billion right now at 22.50, right? Give it a generous price. That's the, I think, 50-day moving average. That would be 44 million shares we take off the table, which is not putting a dent in that 2.1 billion. Like, our ownership of Palantir would get slightly larger. Maybe we would feel a little better, but they would lose $1 billion, which would be netting them 5% that they could get to their GAAP profitability, right? Guarantee that they're going to be GAAP profitable no matter what happens to the business. And it's not really putting a dent in the actual business. Whereas I agree with Amir, if the business is growing in 5 years and it's actually compounding at 30, 35%, we could dream, then they can do what kind of Google and Meta are doing, which is they have so much cash, they don't know what to do with it, so they're buying back their stock. Right now, I think Palantir knows exactly what to do with their $4 billion in cash. Get net interest income to guarantee GAAP profitability. I know the street likes buybacks, but they also love being profitable and growing that EPS. Or number two, put it into boot camps and scale to the point where you can get to 35, 40% year-over-year growth so that you can get those billions of dollars in revenue and then buy back your stock. But buying it back right now for the hell of it, I don't think it makes sense. At least not now.
I just want to say, if we stay realistic, I think that in the future they're going to have to do a buyback program to offset the dilution that they're doing in stock-based compensation, and then I think that it's going to be like done just for that. Like, it's not going to be because the stock is cheap or whatever. It's going to be like, okay, if every year from now we're buying back X amount of shares, to not go crazy with the dilution.
It's a good point, and I feel you on dilution, but the point is, as Coach Rep says,
I'm not saying now. Like, let's say we go 5-10 years into the future where there's massive. Yeah,
I agree. The other thing is also, there's a ton of liquidity for Palantir. I mean, there are people that are willing to buy this stock. I know there's 2.1 billion shares outstanding, but the average volume is like 50 million shares a day. Like people want to trade this company. So if they put up the right numbers, it's not like the outstanding shares are going to be a deterrent for the stock to move higher, right? Because usually if there's a lot of shares, it's a little higher for things to move. There's enough liquidity going around for traders to get excited about the company if it performs. And people would be willing to buy at 27, 28, 29 if they execute at those numbers. But in the future, they definitely do need to buy back.
I mean, the company has been setting up for 20 years, thinking of a longer term strategy. I don't think they would do something as short-term irrational as a boost one quarter by buying back like 1 billion worth
But
of
it is
shares.
funny. It is funny, right? That in Q3 2023, they authorized $1 billion of buybacks. I think that was bullshit when they did it. I think they knew it was bullshit. Like,
Yeah.
they knew they were never
just to
going to actually
pump the
do it.
stock.
Yeah, it was
I
like-
mean, to be
yeah.
fair, maybe if the stock would have fallen to, because when they did it, it was on I think they were around $12-14, and maybe the thought was that if we go
no, they were at 19, and by September, I think 15th, we went to 13.92. I don't know why I know this, but they could have bought it back right before Q4 at $13, at $14, but they didn't do it because there's no point. Like, even though I agree it was cheap at 13-14, right?
Yeah, but what if they would have gone to like 5 and 6?
Yeah,
or
then
something like that.
then it would have. Yeah, I feel your point.
Even I would agree that if the stock was $5 today, they should use their cash towards buybacks. Anyway, coming in on a close, we've been talking for an hour without talking about the thing people care about, which is revenue growth. We can end on that. But I think this one is interesting. The free cash flow margins specifically. I have a target of around 30% as the company gets more mature. We can see it's really erratic as of right now. They recorded a really high Q4, but I think that's because the billing cycle sets it up so that Q4 is stronger than the others. If we can get something around 25 to 30% in Q1, I would be satisfied with that, and that would be aligned with what I expect from them over the long term. And I also, Palantir only reports adjusted free cash flow margin, so you have to calculate the actual free cash flow margin yourself. It doesn't really make sense that they report adjusted anymore, as it's more in line with like real cash flow. So their adjusted is just taking operating activities net cash and adding back cash paid for employer payroll taxes related to SPC, and they subtract capex, and that's their free cash flow. So it's a really simplified way that isn't real free cash flow. So what I've calculated is like the more traditional way, where you take EBIT minus tax and capex, and then you add back depreciation and amortization, and then factor in the change in working capital. So it's a like real free cash flow. So I would expect 25 to 30%. I would be really happy with that. What about you guys? Do you have any expectations from cash flow margins?
I think so. This is not exactly the same thing as what we're looking at here, but adjusted operating income margins to me are the most exciting. I don't think those are the ones you're showing right now, but those are the ones that I was looking at the most in Q4. So those went from 29% to 34%, which is 5% growth quarter over quarter, and they were 17% 18 months ago, so they doubled. And I thought that was like the best metric that I looked at, which I think does influence a bit more of the other margins that we have. So if that, like in my DCF that I did a while ago, I like my bull case was 36% for the next 10 years adjusted operating income margins, which then influences free cash flow as well. If that can inch up a little higher, that would be exciting. But if it stays at 34, I think it would be okay. And then if the margins we're looking at right here, free cash flow inches up higher as well, I think that'd be fine as well.
Well, it's the base, like operating margins are essentially EBIT margins. So I think that's what Arnie finds more important, as well as the free cash flow has a lot more that could impact it. So
correct. Yeah.
If you want to get like the pure operational performance, I think looking at EBIT or operating margins makes more sense. But in absolute terms, the free cash flow is more important to me because it's the actual cash that they're storing. So yeah, both make sense, and there are different reasons to look at both for sure.
Vince, any thoughts on this?
I agree. I'm also on the adjusted camp that I want to see if we can expand from here. I mean, like having 34% margin is crazy high. So I like if they do 30, it's like, is it bearish for the stock? No, it's still like unbelievably high. And it's interesting because after being in this conversation for an hour now, we see that, okay, if they come in with 40% growth, it's going to be amazing because it's on a much higher comp. And how are the algorithms going to react to it? The adjusted margin might come down to 30. So the article that comes out could be that margin goes from 34 to 30, but is that bearish? It's still really, really good. So it's going to be very interesting on earnings, like how the market reacts to it, because I feel that it's going to be a very, very strong quarter, but maybe with the comparisons, it's not going to look as good as people think.
Yeah, I would agree with that. And I mean, again, if free cash flow margins and adjusted operating income margins both can go up, even if they say the same, that's okay. But if they can trend higher, I think that would be good as well.
It's just how high can they go? I mean, 34 is like insanely high.
It's a lot, and it's double for the past 18 months. So it's a lot. All right, revenue growth, Vince or Amir. Do you have a chart for that, or you want to just talk about it? I'm sure you have a chart for that.
I was gonna just say that I want SPAC revenue to not have any more impact. I mean, lower and lower, because it actually increased in Q4 somehow.
So we still own 5 SPACs, right?
It could be more. They reported like 3 holdings, if I recall correctly. But yeah, I mean,
I forgot.
I just wanted,
but
like, yeah, but it still makes up like 7% of commercial revenue. So the filled-in line is commercial X SPAC, and then the SPAC revenue included in that is this. Like we can see that it's still like proportionately still a large part of commercial revenue. So I'm really surprised. We know that they don't really have much in terms of holdings anymore. It's more like they are rewarded stock because the companies they invested in can't really pay the contract sum in cash, so they award stock, and Palantir just sells the stock. So sometimes it doesn't even show up on the 13F filings, because by the time they are reporting the 13F, they already sold the stock they've been granted. So you really have to like scour SEC filings. Like, it's really tedious process. But yeah, I want SPAC revenues to stop having a material impact. Like, if we include government, like, it's barely anything, but it's still like 7% of commercial, which is kind of insane to me that like it's edging higher as well. So yeah, I want that to die out. I don't know. I think people are tired of talking about SPACs. But if you have any comment, put it in. But yeah, I just thought this was funny, and I wanted to slowly trickle out and die out here.
All right. Top line revenue growth. So
I think I put in some inputs here. Let's see.
I'm expecting a surprise on that number, and the reason why I do that is because already in Q3 and Q4 we started to see the AIP bootcamps trickle into earnings. Yeah, so I'm expecting a surprise.
I put in 660. What did I guide for? Like
615.
615.
Yeah. You put in 660. You think they're gonna do 660?
Amir,
well,
amen. Amen.
I'm expecting like 25% year-over-year growth.
Yeah, amen.
Can you zoom in on your number, Amir, on Q1 2024?
Let me. Yeah.
Dude, if they put up 660, I'm gonna get 2 $5 biggie bag from Wendy's.
No, it's just a result. Let me just hide the. So yeah, here we have Q4. Actually,
660. That would be how much year-over-year growth? 25%?
Yeah. So I'm expecting them to break the barrier of 20% and hard, but I think I think I can expand this.
They're guiding for 17% year-over-year growth. That's what they're.
Yeah, I think it's bullshit, but
I think it's bullshit. I think it's bullshit too, but I don't know if 660 is what we get.
The important part here is that I had we talked about the 70% US commercial. I expect like genuine 50% plus in US commercial, and that's where the bulk is going to come from, which equates to like commercial growing around 30% while the government grows like 20, and that would equate to 660. I think 615, like what's that, It's like a 1% quarter-over-quarter growth.
Yeah, I mean that's what they're guiding, right?
Yeah, and no, I don't think it's like I can't make it make sense in my head. It might look like a big jump, like just comparing quarter-over-quarter, but I still think that US commercial is going to come in hard, and it's going to keep coming in hard because, as we spoke about in the beginning, like the boot camps are scaling and scaling quickly. So seeing 70% again, I don't know how you guys interpreted Carp saying that we're still growing 70%. I interpreted it as like they don't have a sales force and they still grew 70%, not that they're actually today growing still 70%.
Yeah, he specifically said he cannot comment on this quarter. Like his lawyers would have like taking him behind backstage and taken a shotgun to his head if he would have commented on this quarter.
Yeah, so I have it at 660, primarily driven by around like 55% growth in US commercial. So what do you have, Amit? And
but the thing is, you have 660, which would be 25% growth. They have not done 25% growth for the past 2 years. So
yeah.
Why would you think they're going to surprise in Q1? I mean, I know your argument is about boot camps, but
look, it's funny. I did a video about this on my channel that if you go into their historic growth rates, and they sucked at sales, and even with no sales force sucking at sales, they have had 25% and higher in the past. So now that they innovated on sales and they have this new system that everybody's copying, it makes no sense to me that they cannot go back to over 25%.
I agree. It definitely, I think we know they'll get back there. I guess the question is Q1, is that the quarter? And I don't know if that's the quarter.
I look,
it is, but
I expected it to be last quarter, to be honest. But yeah, I don't think it's too soon.
Look, I am like I'm a bit less bullish than Amir. Do you have call options on the earnings? But like I would have guessed like 640, 650. Like, but definitely higher than 615. But
like in the context, like 10 or 20 million, like it could be like one line item, one off. Like I don't think it's like a huge difference.
Well, here's the thing. Here's the thing. The 650 that you're, or 660, you're saying 25% year-over-year growth. They're only guided 2.685 billion, which is 19.9% year-over-year. So are you saying if they bring in 25% this quarter, that they're going to raise guidance for that full year to close to 25?
I think during Q4, we're going to get a banger quarter of 30%. I don't think it's going to be this quarter, but sometime during 24, all these bootcamps are finally going to start showing like their strength. So yeah, I'm expecting them to, like, we are in 2024 now. Do you guys remember what Carp guided for 2025?
Yeah, 30%.
No. Before they had boot camps, he said they're gonna do 4.5 billion.
Yeah. Which is 30% growth. Yeah.
Well, from that point on, it's a lot more from today. Right. Like, I don't know if 4.5 billion is reasonable anymore, but I think that we're gonna see some real hardcore acceleration here. I don't know when, but I think it's coming this year, and then it's gonna just piggyback and keep carrying on. So I don't know. This quarter, like I just put it out there, let's say 25%. I think the most important part is that it might not be 25 overall, but if we see US commercial revenue accelerate, that's all that matters, because that's been stagnant. We've seen the customer count grow a lot, but the actual growth of the commercial revenues in the US has not really been accelerating. So I think that's the most important part and what to focus on. So yeah, as long as that's like 40, 50%, I don't really care about the top line number. I mean, it's gonna be easy to beat their estimates is what I would guess. So yeah, I don't know.
I think they're playing this game, Amit, that they're like, they know that they sandbagged and that they're going to have to raise the guidance. And I think that that's our challenge in the earnings, that I think that Wall Street has baked in that they're going to raise the guidance. So when they raise the guidance, the question is, are they going to raise it more than what has already been baked in? Or because I think that if they come in with a very slight revenue beat and they very slightly increase the guidance, it could be that the stock will fall on it, because I think that has been sort of baked in to the price. So it's a very interesting very interesting situation. But all of us kind of know that the guidance that they did is bullcrap, and they're going to increase it. The question is just how much.
Yeah, I agree. And I agree with Amir as well that eventually the growth is going to come. If it's Q1 or not, we'll see. Now, in the context of the stock, let's say Q1 isn't the 660 quarter, but let's say it's 630 or 640 or even 625, and it's very obvious that 30% growth is coming back. The market's going to try to front run that at some level, right? Just like we're not seeing below 20 since February 5th. And I mean, maybe there's a chance we go below 20 if the market collapses. But like, what if we don't see below 25 again? If the market front runs Amir's sort of terminal Q4 that like we see the growth is going to be there. If that's the case, the stock's going to get to a different level, right?
Yeah, I think if we get Amir's number on the print, I think the stock will start with a 3 on the day after.
Yeah, I think so too. And even if it falls down a little bit, it's not going to go back to 21. I mean, it's going to be very hard. It could, right? But just like we have not got below 20. I think with the lowest we got was $20.05 a couple weeks ago when the S&P was at 492. Now, granted, the macro has held up, and if the S&P went to 470, we would absolutely be below 20, guaranteed. That hasn't happened. But if this is a bang out quarter, that doesn't have to be a bang out quarter in Q1 numbers, but is very obviously signaling that it's going to be a bang out year, then the market's going to front run it, especially because there's so much liquidity around Palantir.
I just checked the analyst consensus. According to Seeking Alpha, it's 617.
Yeah,
So
that's what they got it.
617.
Yeah, that's what they got.
Isn't that kind of telling of what kind of losers we have?
Well,
I
don't want to say that yet, because if they come in at 620, it's not that bad, right? Like but
if you look at the okay, never mind this year, they're estimating for the full year 2.6 billion.
Correct.
Like the analysts.
I know. Well, that's because Palantir said 2.6.
It's so funny
but doesn't it show like they don't understand anything? Like I'm so surprised by that.
It's so funny how Amir is like the most data driven and seems very bearish, and now we're like arguing that he's too bullish.
He's too bullish.
I'm never bearish. I always get that comment.
But where I agree with Amir, and this is also why I bought my call options, is that there is something happening in the background that I think that is not priced in, because we all see the results from the customers. We see how many boot camps they're doing. If there is any reasonable conversion from the boot camps, they should start to have, maybe not Q1, but we all know that the blowout is coming. And where I think that the analysts are going wrong is that they're not giving any credit to, like, they want the facts to slap them in the face, and that's when they're going to start counting with it. But yeah, like there's such an opportunity. And I've been on this show a few times. Almost always I'm called a bear, even though I might be like one of the Super Bulls. I just want to see a path to the valuation, like make it make sense, basically. And this doesn't make sense in the opposite way. Like, this is so stupid to me. Like, okay, clip this. I will delete my Twitter account if they do 2.6 or less. Like, it's the most stupid thing I've seen. Like, I will delete my Twitter account. I don't care about my $15 Elon Musk bi-weekly payout. I'm gonna delete my Twitter account. I'm staking that. This is absurd. Like, how many analysts cover this? Like 16 analysts. Like, it's insane.
Well, the only ones that don't agree with that is Dan Ives and Mariana, right? That's why they have the highest targets on the street. They're the ones who see a little bit more of the vision.
You are a bully bear.
Bully bear.
All right, so we'll end it off here. Q1, I think, is going to go very, very strong. All of us agree. Whatever the stock does, we'll see what happens. At the end of the day, we can't predict that. I think all of us are pretty bullish that the stock will reflect a good earnings. The question is, will the pump maintain itself? Will it hold? At what point will it consolidate? That'll be decided in the coming weeks. But all of us are long-term investors outside of, some gambling call options. We want the company to perform. And as long as the company performs, the stock could go to $3. We would all still be super excited because the company is performing. And I think we're going to see the company perform. Just all the deals we've seen over the past 90 days, it seems pretty obvious they're going to pull up a good quarter. And then we'll see how Wall Street reacts. Vince and Amir are on Twitter. Definitely recommend. I know a lot of you guys know Vince, but you don't know Amir. He is, he basically carried this entire episode. So please make sure to follow him. I'm putting both their Twitters in the chat, and it's already in the description. And please make sure to check them out. I think Vince might be with me on earnings. Arnie will definitely be with me, and Amir probably won't be able to be with us, but he'll be on next week, and we'll break everything down. Any last words before earnings?
Thank you for having me on. I really appreciate it. I'm sorry that I kept making promises to come on and never made the time. So I promise I'll be better in the future and hope to see you guys more often.
This was good. You carried the whole episode on this one, so that you made up for it. Vince?
No.
Yeah, may the force be with us. Let's bang the table for Carpetto. That's what Arnie would say.
Let's do it. Thank you, everybody. Again, this community is everything. It's the reason we all do this every week, and without you guys, this wouldn't be fun to do. So thank you, everybody, for being here. Monday, 3:30 p.m. I'll be live, and let's get this show on the road and see what happens for Palantir Q1 2024 earnings. Bye, everyone. Have a good night.
Bye-bye.
Yeah. Ciao.